If you don't know how to read a settlement statement, you're trusting someone else to make sure you get paid at closing. And this mistake can cost you thousands of dollars. I'm izaiahbarba and I run a 7-figure wholesale real estate company. And in this video, I'll show you exactly how we review every settlement statement before closing. And a quick disclaimer, I'm not an attorney, this is not legal advice. I'm just simply sharing what we do in our business for educational purposes. And whether your title company calls it a HUD, settlement statement, ALTA, or closing statement, they're all the same thing. It just shows where every dollar is going in the transaction. And while this video is geared towards wholesale real estate, specifically for a wholesaler to get paid an assignment fee, the principles apply to investors, sellers, buyers, realtors, everyone involved in the transaction. So we'll start by reviewing the agreements that make up the settlement statement, and then we'll walk through line by line so you know exactly what to look out for before closing. Let's dive into it. So to dive into it, we're going to do an actual example of a property that we are in the process of wholesaling, and we're going to break down the numbers for you guys. So if you guys would like a copy of this template, just comment template and I will send it over to you. And so what this looks like is we're going to do this property here, and a lot of this stuff is going to be blurred out because obviously there's a lot of confidential stuff going on because someone's actually selling their house. But let's do the breakdown. So it all starts with the contracts that we have with the seller, and then we have the contract with the end buyer. And all we're doing is just ensuring that what we have the contract with the seller and the contract we have the end buyer, it's reading correctly on the HUD. So to keep it simple, we have a promise with the seller, we have a promise with the end buyer. We want to make sure what was in writing is actually conveyed properly. So to play that out, right now this is the actual HUD, but let's just see this. So right now, here is our contract that we have with the seller. We are at a purchase price of $500,000 with the seller, and there's an earnest money deposit of $500. When I scroll down, and this is the most relevant parts, is closing costs. They're all going to be paid by us as the buyer, and then any liens, unpaid utilities, mortgages will be paid by the seller. So that's the main thing that this will be conveyed on the HUD. So just remember, hey, $500,000 to the seller, buyer's paying all closing costs, and the seller is paying any liens like mortgage or unpaid utility bills. So right now, when we go over the HUD, we're going to make sure that those things are aligned. And now let's look at the end buyer's contract. So the end buyer's contract is at $530,000. On 13C, it says that they are going to be paying all closing costs, and there's also going to be a fee of $749. So how we set this up is, hey, we promised the seller that we're going to pay all closing costs, but we actually put it on the end buyer in the transaction. So how do we see all the numbers and make sure we actually get paid correctly? Let's dive into it. First thing I'm going to do is just make a copy of this template for this property. So to make a copy, when we send you guys over the link, it's just a file. Go here, and then you'd say make a copy, and you'd copy the calculator. So here's the calculator. You would put in the seller's name, the address, and this is the reason why you do this is so that the title company can easily see the number breakdown that we are doing. So to start with end buyer's price, the purchase price of the end buyer is $530,000, and then the purchase price, ours with the seller, so this is ours with the seller, is $500,000. And there's novations, double closings, there's all these different ways as a wholesaler that you can get paid. And so the reason why we have this calculator is because there's different strategies here. Okay, cool. So now we see the difference of $30,000, and now we're going to, that's what we should be getting paid. And now we also have that $749 admin fee. When I looked here, there'll be an admin fee charge as well, and that's for us just handling the whole transaction coordinating side of things. So I'm going to go to that and add in the $749. And so right now our fee should be $30,749. And so let's, there's also EMD that we submitted. And so EMD is the earnest money deposit, which is what you give to the title company. These are usually the ones holding it, or it could be the realtor. But the idea is it's just kind of a deposit that you put down to show that you have interest in the property during the process of you buying it. So $500 was ours. So $500 is the earnest money that we already gave the title company, so we want to make sure that we get that money back. So I'm going to go here and put $500, and so now our fee, or rather the amount of money that we're going to get back, including our earnest money, is $31,249. So we want to make sure that shows up in the HUD. So let's dive into the HUD and see if it's looking accurate. So it looks like the purchase price is $500,000 with the seller So that is great. And there's two sides here. So this is the seller side right here. And this is what the buyer side is. And so I'm looking at both. And my main goal is ensuring that our company gets paid, and then our client, the seller in this case, is getting made whole as well. And so I'm looking at both of those numbers. So let's just start with the seller, and then I will go to the buyer. So the seller right now says $500,000. That's what we promised them in our contract or agreement. So $500,000. There's taxes right here of $431. Looks like it got paid in advance. So I'm going to go here. So $500,000, and looks like there's a tax proration that already occurred. And by the way, you can add multiple items. There's just some examples, but tax proration was $431. Okay, so I just separated this out just so you guys could see it side by side. And the idea is $500,000, $431. So I put $431 here, and that's actually a credit because they paid it in advance. So it shouldn't be subtracted from the amount. They should be getting that money back if they already paid this money to the town in advance. So I'm going to put this on the credit side. And a simple way to think of it is debit is what's getting subtracted, credit is what's getting added. So you could just do a little minus sign, is what's getting subtracted, credit is what's getting added. So $500,000 is a plus because they're getting that amount. $431 is, so they paid in advance, they're getting that amount back as well. And so right now it says $530,431. And then it looks like, let's see if there's any charges on their side. And right now there shouldn't be any charges based off of our agreement with them. So let's look down, let's see here, nothing here. And sometimes if it was here, we'll do the breakdown. But yeah, it looks like there's actually there's settlement charges of $643. And there's new res, and I believe new res is the loan. So let's just see what this $643 consists of. So I'm going to scroll down. It says line 1400. So we're at 600. So I'm going to scroll all the way down, and there it is, 643. What does this consist of? Final reading. Okay, final reading to the city of Medford. That is looking at our agreement. We go here, and it says any liens, unpaid utility bills. And so that is something that's paid by the seller, and that is an unpaid utility bill. It's a final reading, which is like a water amount. So that's going to be actually taken away from the seller. So I'm going to say final water reading, $643. So that's included there. And then we got the mortgage. And then based off of this, so we got the mortgage right here as well. And so that mortgage amount is the $134,000. So I'm going to say new res, and that is $134,000, and that's a debit that's coming away from them, $607.78. So right now the seller should be, based off of all these numbers, there's no closing costs, there's only just unpaid liens. So they're getting the amount that they paid in advance, they're getting the amount that they owe to the city for water, because that is a lien based off of our agreement. And all I'm doing right now is I'm just reading our agreement that we had with the seller, and I'm reading the agreement that we had with the buyer, and ensuring that it's reflected properly through numbers. That's all I'm doing. So $365,000 is what the seller's owed, and I'm going to double check here. Awesome. So it looks like it's correct. And if this was off, I would send this over to the title company and be like, hey, this is the number that needs to be here based off of our agreement with the seller. And obviously you can give them a call and understand what's going on their side if they have something different, but that is the idea. So right now, seller is, looks like they're made whole, which is amazing. And so now on our side, let's just see for the buyer side. So it looks like the buyer, so left I just did this, and by the way, all settlement statements, Alta's, HUDs, sometimes they look different. They could be totally different in different states. And so this is a Massachusetts one, but they could look 100% different. So just a heads up that they may come in different forms, but they all read the same. It just might be a different format. So we got the buyer, $500,000 is the contract price, and then it includes our fee. So the fee is already there. Sometimes our fee, when the title company doesn't actually send us our fee, so that's why we have to calculate it. So that's why I did it here. But it looks like they already included it. So that's great. And they have $194,000 extra. Interesting that they're paying on top of that. So I'm going to see what that consists of. So gross amount that they're bringing to the table, they're purchasing this at $500K, and then they're coming, in order to buy this, they have to come in at $725,000. I'm going to figure out what's the story there, but that's insane. So it looks like that consists of their $10,000 earnest money that they put down. So there's that. Principal amount, okay, deposit collected. So this is just money that's that they already paid. So this is good to see. They have a loan origination fee of $7,000. So this is all the loan stuff. They have a construction loan. Okay, so that's why they're bringing so much to closing, because they have a construction loan that they're doing. So the interest. So this is all, expenses from them getting a loan. This is all that as well. Title charges, so then these are all the closing costs that we, based off of our agreement that we put to the title company. So we got the title exam, MLS, attorney's fees, all this stuff. This is all being paid on the left-hand side from the buyer. And so if this was split or paid by the seller, because usually, for example, city, county tax stamps is split. That's just a typical transaction. So you would see that this divided by 2, so it's like 1,140 on this side, and then on this side. Typically, that's what it looks like, but in this case, how we set it up, hey, we put it all on the buyer based off of this being a discounted deal. And so here it is, all this stuff. Good to see. Okay, and that all these closing costs, and they're just regular closing costs. So you got the recording fees. Yeah, well, and then some of these are just costs that the title company charges, depending on the title company. And then you got the one that, and then we also got our admin fee shown. Awesome. So $194,875. So that's where that 194 comes from, and then our assignment fee, and that when you add these two up, also including this, the buyer is at $725,000. So good to see. And so I'm also just seeing on the buyer side, like, hey, making sure that their numbers are correct too. So as a wholesaler kind of facilitating the transaction, you want to see both sides. My main focus though is making sure the seller, the agreement that we have with the seller, they are getting paid what we promised, and then also on our side, we are getting paid in order to keep the lights on. So that is a quick rundown of looking over a settlement statement, ALTA or HUD, all the same name. And you can see here, I can actually just send this over to the title company, and as a matter of filing, downloading this and sending it over as a PDF so they could see on their side of what's going on, and the cost that we did. So you could also just put in all the buyer closing costs, because this is buyer brings it close. I didn't include it, but it's that 194. So you could say like all settlements charges, you could break it out, every single one, but you could add that here, and that's what would equate to what's buyer bringing to closing. In my mind, my big thing that we really care about, like I mentioned earlier, is making sure that we are getting paid and the seller is made whole. If this video helped at all, subscribe and drop a comment. Everything I just walked through and more lives inside our school community. Also, click the links below for additional resources and access. Thank you.